he said, Trap, they've had so many reasons, so many situations to sell off, but they haven't. Think about it. It is June. We've had war, bombing, bank failure. I'll talk about that today. Inflation, jobs. We've had some things that can really cause the market to sell off, but yet we haven't. This is similar to the Roaring Twenties. I want y'all to go look at the Roaring Twenties on what was happening in the Roaring Twenties. I need you to do your research and homework on that to figure out what that was. Right? I want y'all to go look at that. But then he said, the consumer is stubborn. The consumer has said to the market, I will spend money. I will use credit. Even though inflation is high, even though banks are having a, watch this, high inflation makes it hard for banks to lend money. Okay, watch it. Because it's costing them a lot of money. It's costing them a lot of money to loan money. Go look at what's called a Fed fund rate. It's costing the bank a lot of money to loan money to growing companies. Now, even though the growing companies got to pay a lot, so now they not going to borrow as much as they will borrow at 5% as what they will borrow at 2% or what they will borrow at 0%. So now this is why in the market you don't see a lot of what? IPOs. I want this to make sense to y'all. I want this to make sense to y'all. If you go look at the Fed fund rate, that's the rate at which banks got to pay the loan money. So now they got to make that up by lending money to people, but they make more money from lending it to companies that won't grow their money. So now the company's going to borrow some money, but they're not going to borrow as much money to grow their company because of what it's costing them. So now they not borrowing as much money, which is why right now banks have over $500 billion in unrealized losses sitting on the balance sheet. We talking basic economics right here that you need to learn about how to play this game. So because banks can't lend money, and whether you realize it or not, yes, the small business is the life bloodline to the American economy, but also it is because banks push money into those small businesses as oxygen. And so if the banks can't give the small businesses money, those small businesses once was a Uber, once was a Microsoft, that was a small Amazon that grew huge because it got injected with money. Okay? Now watch this. Because that's not happening, this is a black eye to the game. And so because this is high, this is a black eye to the game. So the economy can't grow at the rate it wants to grow because the small businesses can't hire enough people because they got to do what? Buckle down. Because big tech companies right now are doing what? Laying off by the hundreds. So also, that puts us in this situation. Jobs, credit. Well, how does credit play? Well, we understand right now, short-term credit is 21%. So people now have to use credit, but guess what? At 21%, you ain't swiping that thing as much as you would, but you swiping it a little bit more because why? Inflation is high. So even though you swiping less, it's costing you more. Let's go a little further though. Let's go a little bit further. But also, guess what? Housing. It costs more now to rent than to own. Way more. No, to own than to rent. It costs way more now to own than to rent. you have seen an influx. 37% of Americans have now did what? Downsized. 37% of Americans have now downsized. Why? It's not complicated. Right? It's not complicated. And I'm saying this because Peter told me this. I said, oh, so when he told me this, I said, oh, this makes sense. And because I had recorded that video the day before, I'm like, here's the reasons. But also, we've seen oil now drop 12%. This is a problem. So the market has every reason to sell off. But for some reason, we hitting all-time highs. Because it is an innate nature for the market to disregard economic data as long as it can in order for it to do what it naturally wants to do, which is print money. That's what it naturally wants to do.